right, we're ready.
Hello, ACC Eagles, welcome. Before we get started, I just wanted to go over a couple quick housekeeping rules. Please remain on mute while the speaker is presenting, but feel free to drop your questions at any time. At the end, the speaker will answer your questions that you dropped in the chat, or you can unmute and ask our guest speaker directly. Today, we have invited Kanisha Hines, the CEO of Credit Fit Restoration and Financial Services and Vice President of Infinite Shield Protection Services in the heart of Milwaukee, Wisconsin, to share with us common sense tips to increase our understanding of building credit, handling credit, card debt, and money management. Without further ado, I would like to present to you all Kanisha Hines.
Hello, hello. So I'm really excited to be your presenter for today. I really hope that you all leave out of this webinar, feeling a little bit refreshed about building credit, establishing credit, and how to maintain your good credit. Just to kind of give you a little bit background information about me. I am the wife of James Hines, and we are the VP. I'm the VP of Infinite Shield Protection Services. Roughly around 7 years ago, my husband and we wanted to go into home ownership. And as you already know, when you're going into this new journey and some things are new, a lot of times you're hearing everyone say, well, what's that credit score looking like? Do you have good credit, or do you guys have enough funds saved up to be able to purchase a home? And so my husband and we went ahead and took the time then to educate ourselves on building credit. But the first step that we needed to do, of course, was to assess our own personal credit. At the time, I was pregnant with our 5-year-old, and it just seemed like it was a lot of work to pretty much go ahead and dissect both of our credit and both of us were working full-time jobs, and we knew that we wanted to move and we needed to buy a house quickly because our family was expanding. So the first thing that we did was we actually sat down with a credit consultant. And this lady, she was just a fresh wind of air that just came into our lives because I had already had some background experience with working with credit, but at the time I just did not have the time to just really sit down and focus in on getting my credit repaired. And so just all of a sudden, out of nowhere, something just came over me and was just like, you know what? Maybe this is something that you can do, Kanisha, to be able to assist other people in identifying key factors and determining where they stand. Are they credit worthy? So that they can then be able to purchase large ticketed items that they're looking, whether it's buying a house or whether it's purchasing a vehicle. Or even if it's just you need the good credit so that you can get that apartment that you are trying to lease or rent. So there are definitely many factors that come into play when it comes to establishing credit. The first thing I want to just kind of piggyback on is what is credit? And we all know that we all have some old school parents and grandparents that would always say, I don't need credit, I pay everything with cash. I've been buying my homes and my cars with cash all my life. And so that's all I need because I don't want to owe anybody. But the truth of the matter is that no one is really sitting realistically on $100,000 in the bank. So for that very reason, credit is a very determining factor to help you achieve that goal. So credit is the ability or the system used to allow you to buy now and pay later. And it's a really easy factor It's a really easy definition that I like to be able to present to people all the time when they're looking to start building their credit. Um, they want to make sure that you're credit worthy. And how they do that is they want to have these determining factors in place to make sure that you are in a position to pay back whatever it is that you're borrowing. So credit, of course, with that being said, there are so many different lenders out here that's always looking to lend. But a lot of people ask those questions. What are lenders looking for? What are they looking for when I need to go to the bank and I need to take out $20,000 to be able to purchase a vehicle? What are the lenders looking for? And so I'm just going to tell you this really quickly. Lenders are looking to see that, for one, they want to be able to make sure that there is something that they have noticeably noticed that you pay on time each month. 35% of your credit report is based off of your on-time payments. So when you go to the bank and they're looking and you say, I need to get a $20,000 loan, what they then do is they pull up a credit report on you. Your credit report is not only going to have your first and last name, your address, your date of birth, also going to have pivotal information that shows if you have any open accounts. These open accounts are items that can track your payment history each month. And my hope, of course, is that you're paying your bills on time so that when they track it, they see that you have a reputation of being able to not only pay your bills on time when they do, but you're paying them in full. So that is the first step of establishing or the first introductory of credit. Now, when we dig deep, I like to use this analogy very often. Well, it's actually really a true story. So I had a girlfriend, and I'm not going to say her name, but she came to me one day and she said, "Hey, Kanisha, can I borrow $150?" I never asked her what the $150 was for. But I said, "Sure, when are you going to pay me back?" She said, "I'll pay you back next week, Friday." Next, and after I had already loaned her the $150, I was expecting, of course, to receive the money that I loaned out to her. That Friday, I did not receive a phone call from her at all. Not only did I not receive a phone call from her, but I then decided, well, let me go ahead and give her a call. So I gave her a call. She answers the phone, and I say to her, "Hey, how's it going?" Before I can even ask about the money, she began to then tell me about how life was just throwing some curveballs her way. And she needed more time to pay off the debt that she owed me. Now, I'm using this example as it relates to the bank and as it relates to credit, because not only are lenders looking to see that, of course, you can pay back money that you owe the lender, but they want their effort. See, my girlfriend, what she didn't realize is that when she told me that she could pay me back next week, Friday, I was holding her to her word. Now, I will be honest, some lenders are also the exact same way. You have lenders where when you go to the bank, and they lent you that $20,000 loan so that you can get your vehicle, they send you an actual contract agreement. And that contract agreement has terms in there that protects them as well as you. Now, what it does is it pretty much discloses to you the terms of your loan. It's pretty much saying and relaying that not only are you going to pay back this loan, but you also should pay, that you should pay attention to while you are looking to borrow money from the bank. Now, my girlfriend, on the other hand, let's talk about it. I was expecting for her to pay me back that Friday, and she didn't. She ended up telling me the story of what was going on with her life, and she ended up asking for an extension. Now, I will be honest, because I'm her girlfriend and I was very understanding, I was able to give her something called grace. And with me extending grace to her, I was able to go ahead and say to her, that's fine. And then ask her, when will you be able to pay me back? She gave me another date, and I was okay with that. When we look at credit, we want to look at credit as a transactional relationship, because that's exactly what it is. Lenders want to know that whatever they lend you, you are able to pay back the debt that you owe, and that you can pay back on time. It's essential when you are building credit. As you are in a position as a college student, right now, many of you have what we call student loan debt. Now, for most of you, right now, you are in what they call like a deferment, where you don't have to pay any money at this time because you are pursuing you're doing what you're supposed to do. You're in school, and at this present time, the student loan lender, whether it be Fed Loans, whether it be Great Lakes, whether it be Navient, whether it be Sally Mae, they're not expecting you to pay that money back right now, because right now you're in a period of grace. That's what I like to call it. Now, when you graduate from school, what's going to happen is that your lender, your student loan lender, is going to start sending you emails, and you're going to start receiving letters in the mail. And the letters that you get in the mail, it's pretty much going to show you the amount that you had actually borrowed from them, and it's also going to be impacted by interest. Interest is pretty much saying, we borrowed you this $150,000 for school. And because we borrowed you this, we're going to tap on a little bit of interest on that loan in addition to what you owe. Now, right now, it's not going to look like, oh, much of anything. But when you are establishing credit, having good credit matters. People that have good credit, they generally range from the 700 to 800 as an ideal credit score. And again, lenders all have their different criteria. Your credit score and your credit profile is going to be the determining factor of how much interest is tapped on to that loan. Now, again, you being a college student right now, you have the advantage because most of your student loans, the interest is pretty much a fixed rate. It's not going to change no matter, where your credit lies at this present time. But let's say you go to the bank again, and let's say when you went to the bank, You were someone who didn't have any credit history at all. And generally they say that, or there's a myth that says, oh, no credit is better than having is worse than having bad credit. In the credit world, it's the same. It's the same. So what you need to do to establish credit is you would go to the lender and you would say to the lender, I don't have any payment history. I've never owned my own home. I don't own a vehicle. I'm still driving around in the pup that my mom and my daddy bought me a few years ago in high school to give me the A and B. And now I'm in a position where I've graduated now from college and I'm trying to establish some credit. So when you go to the bank, the lender or whoever you are banking with, and I'm just going to use the bank as an example, the lender, your bank, is going to sit down with you. And what they're going to do is they're going to have you or advise you to open up something called trade lines. Trade lines are essential to building credit because what they are their open accounts that actually report to the credit bureaus every month. Now, who are the credit bureaus? The credit bureaus are Equifax, TransUnion, and Experian. And with these three credit bureaus, they are the people that actually track everything that goes on with your credit profile. So the moment that you went into the bank and you sat down with an advisor and they begin to talk with you about trade lines again, and we said trade lines are open accounts that report to the credit bureaus every month. The moment you apply for one trade line is the moment that the credit bureaus will start tracking what you do. Now, some of you may say, what counts as an open account? What accounts as an open trade line? So a trade line can be anywhere or anything from a car note, which is an automobile loan. So if you are making payments, if you purchased you a vehicle and you're making payments on it every month, that's an open account that gets reported onto the credit bureaus. Your mortgage, if you have a mortgage, that is something that can also be tracked onto your credit report. Credit cards. Credit cards are also a really great way to build and to establish credit. The good thing about credit cards is that for most of the college students, of course, who typically do not have any form of credit, they're able to open up something called secured credit cards. And secured credit cards are credit cards that allow you to be able to use and occupy, but it enforces a down payment or a deposit in order for you to use it or to activate it. Now, because lenders, they don't know you, they're saying, hey, this kid around the block, Ben is in his sophomore year of college and he wants a credit card, but we don't have any type of payment history on him. We can't track anything that he does. Let's go ahead and get him applied for a secure credit card. You go ahead and you get your secure credit card through Capital One. Now, Capital One, they say, we'll give you $300, but you have to pay a deposit of $150. That $150 is what's going to activate your credit card. When you pay that $150, they will then give you access to a credit card that has $300 on that card. Now, the good thing about secured credit cards is that they're perfect for building credit. And they pretty much hold your hand in doing so. So as a credit consultant, most of my clients come to me and they don't have any credit. And I do recommend to them secure credit cards through Discover, Capital One. There's one called Open Sky. And these are credit cards that you, as a college student, can actually open up and put down a little deposit. And then now you have access to some credit. Now, you definitely want to use the credit responsibly. You don't want to go overboard, because I remember when I was in college, and my first credit card that I had was a Capital One credit card, and it had $300 on it. And my mom used to say to me all the time, you better use this card very wisely and only use it for emergency purposes. Let me tell y'all something. The very first day that I got my credit card, I was ruined. I was ruined. I was so ruined. My girlfriend and I, we ended up going to Madison, Wisconsin, to a college party. And when we went to this college party, I mean, you know, you got to get dolled up. So you want to get you some nice clothes, you need some new shoes. And before you know it, I had maxed out my $300 credit card just like that. Irresponsible of me. Very, very irresponsible. And the reality of it was that although I had now this access to this credit card, I didn't know how to use it. I did not know how to use it responsibly or correctly. So the first thing that I had to do was I had to go, of course, go pay the credit card bill. And I had to have a sit down with them to talk about how to responsibly use my credit card. It leads me to my next my next intervention with you all. When you are establishing credit and you have now opened up your first open account, which just so happens to be your credit card, you want to make sure that you know how to use that open account. Just like the bank that you went to when you went and borrowed the $20,000 for a car, and they gave you a contract to show you when your statement or when your payment is due, the credit cards issue something in the mail. And what they will do is it will show you your credit card limit and the amount that you have already spent. And also on that as well, it's going to show you a date, which is a statement date. That statement date is so important because it's going to show you when your payment is due. Your responsibility to your credit is to building your credit is to make sure, is to make sure that you pay those on time. Why? Because 35% of the credit history amounts to you making on-time payments. So you're going to take your credit card and it's going to say that your bill payment is due April 20th. You should be in a position to be able to pay at least the minimum balance. Now, the ideal is to really every month. That is generally the idea. If you have a credit card and your balance is just $300 and you only spent $100 that month for that time period, the ideal situation is really for you to just pay it off in full so that now you will begin to get an actual credit score. That credit score is just a reflection of what you did with your credit card. So you use your credit card, you spent $100, and that's actually too much. Because it comes to credit card utilization. Credit cards should only be used for emergency purposes. And lenders, your credit card lender, whether it be Capital One, Discover, Bank of America, whether it's with a credit union, which whomever your credit card issuer is, they are looking for you to only utilize 30% of that credit card. So you really never want to go over 30% usage of your, and it's so essential because lenders, again, credit card issuers, they're going to be looking at how you spend your money. And credit is a form of money. That's exactly what it is. It's a form of money. And so you go ahead, you see your statement, and as you're looking at your statement, you see what it says minimum amount due. And most of the minimum amount due will probably be any bucks. You want to at least make sure that you're paying the minimum balance on your credit card, just so that you can make sure that it accounts to you making an on-time payment. Now, this is the trickster. This is the trickster. We talked about open accounts. How did we say that we can open up account, and what are those open accounts? You can open up, of course, an auto loan. I said a mortgage. You know, if you have a mortgage, if you own a home or a condo, that's another open account that counts as a trade line that will positively reflect your credit report. And then, of course, we talked about the credit card. But let's talk about that interest on that credit card. College students, interest on credit cards are generally high. They're usually ranging anywhere between 18 to 26%. And a lot of times it goes according to your credit. You want to make sure, though, that each month you want to keep practicing paying the credit card off in full every month. That is the game changer right there. Because when you pay the credit card off in full every month, you then eliminate the interest. The interest is how the banks make their money. The banks want you to pay the interest. That's how they make their profit. But if you can get to a position and to a place where you're using your credit responsibly and that you're managing your finances responsibly, you'll get to a place where not only are you tracking and making on-time payments on, making on-time payments on that credit card, on that, particularly in your credit cards, you don't have to pay the bank no extra money when you go ahead and pay it in full every month. That is the objective. Now, I know you guys are in college. I've been there too. And a lot of this information is probably new information because, again, very seldom we're often, especially in the Black community, we don't really talk so much about credit, and we run away from the idea of having credit cards. We run away from the idea of utilizing credit, but credit actually is a good thing when it's used responsibly. I want you to know can help you, of course, in not only just establishing credit, but having great credit practices when it comes to building your credit. So I had named 3 things or 3 accounts that you can open up where it will help you, of course, to start building you some credit. But there are other determining factors too, and other trade lines and accounts that you can use. If you're living on your own, there is a website called creditmyrent.com. And what you can do if you're living on your own and you do pay rent every month, you can go right on there and you would fill out your information right on there, and they're going to ask you a question. And the question that they're going to ask you, the question that they'll ask is, who is your landlord? And you're going to put your landlord information in there. And when you put your landlord information in there, what they'll do is they'll contact your landlord, and your landlord will be able to start providing your pay to the credit bureaus each month. And that's like one of the most quick, that's like a really quick, easy way, because most of you guys probably, especially the upperclassmen, junior and seniors, are probably already living on their own or have a roommate. It's something that you're already doing. You're already paying rent. So you might as well just start having that listed on your credit report so that they can start tracking, and so that they can see that, hey, I pay my rent on time every month. That has to account for something. And it does. I'm actually going to go ahead here, kind of taking questions roughly around 12:40. So if you have any additional questions that you want to ask me, definitely just kind of feed them to me. I see one person has a question, and so I want to keep moving along here. There's another system, another resource that you can use to help build credit as well. And it's called Self-Lender. Self-Lender is actually like a savings account. And it's pretty much like an online savings account. So it's pretty much almost like invisible to you. So it's not you have to physically on the account. But you can go on to www.self, S as in Sam, ELF as in Frank.com. And you can open yourself up a self-lender account. The self account only costs about $9 to open up. And what it does for you, it's a savings account that you put money into every month. And you get to choose the target amount that you want to put into the account every month. And you get to choose the date that you want assigned on to that particular account. You would then find yourself putting money down. And when you put money into that account each month, it's going to again report to the credit bureaus every month. The good thing about that is that it's helping you get into a habit of saving money, because you're pouring money in a self savings account. Now, with this self savings account, it is a term account. What does term mean? Term means that you actually have this account open for an allotted time. The self-lender account has to be opened up for at least 24 months. So you would have that self-lender account for the next 24 months, and you'll be pouring, let's say you put in $25 into that account every month for the next 24 months. The best thing about, and what I love the most about self-lender account, is that not only is it perfect for those that are building credit who do not already have any credit established, but at the end of the 24 months, it allows you to go ahead and pull all of that money out. So everything that you were saving up, it will then be dispersed right back to you, and the account will close, and it will show positively on your credit report that you were making on-time payments into this particular account. Now, let's talk about some of the mishabits that we see when it comes to people mismanaging their credit. Clients who come to me and they'll say, I already have credit, but my credit is janky, it's jacked up. You know, when I turned 18, I had a car, I had a bunch of credit card debt. I just screwed everything up, and I don't even know where to begin. You know, my credit is just jacked up. It's about a 540. Now, we know already that the determining factor of good credit is anywhere, good to excellent credit is anywhere between really 700 to 800. What we deem as a fair credit score is anywhere between like a 650 and that or I'm sorry, it's really a 650 to about that 699. That's kind of deemed as fair, where lenders are more willing to work with you. Um, but if you are in that boat where you're saying my credit's already jacked up, where do I start? The first thing you want to do is to get a credit report. You want to pull all 3 credit reports from all 3 credit bureaus. Those credit bureaus, again, are Equifax, Experian, and TransUnion. You actually can get them completely free. You can get your credit reports completely free. You can go on to www.annualcreditreport.com. It's completely free. You're going to type in your information. It's going to ask you some personal information that only you would have the answer to. And it's only the questions that they would ask. They'll ask these questions just to verify that you are who you say that you are. And of course, just to protect your privacy. Once you go ahead and you request those credit reports, immediately you have access to them right then and there. You want to go ahead and you want to download that information. The first thing you want to do when you're looking to assess your credit reports is you want to make sure that are collecting the correct information on you. Sometimes you may notice that they have your name misspelled. You may notice that they have a couple of addresses that are incorrect, and you're like, hey, I don't live here, or I've never lived here. Where is this address coming from? Very often, my clients come to me and they have these really low credit scores, and sometimes they're like, I don't even know how. Or when we go ahead and we pull up the credit report, we do an assessment, and the people say to me very often, I've never lived here. This isn't who I am. I want to dispute information that's it's incorrect information. In the year of 1970, they passed a bill called the Fair Credit Reporting Act. And the Fair Credit Reporting Act was used as a way to protect consumers' credit and the usage of their private information. It also gave consumers the right to dispute any information listed on the credit report that either they have no knowledge of, is obsolete, negative, derogatory remarks, or it consists of late payments. And they're like, wait a minute. Through the Fair Credit Reporting Act, you have that right to dispute any and all information on your credit report, whether you think it's right or whether you think it's wrong. When you get your annual credit report, you want to make sure that the information that they have is correct. The first thing I like to do is I always sit down with my clients and I grab my handy dandy, not notebook, but yellow highlighter. My highlighter is going to show me exactly correct. The incorrect information is what I want to go ahead and have removed off my credit report. The first thing I'm going to do is I am going to dispute either directly with the credit bureaus, with TransUnion, Experian, and Equifax. I can do that right online with them. I can call them, but I personally like to write letters. And when I write them a letter, I'm writing them a letter and I am addressing to them what I see on my credit report that's inaccurate, whether it's my personal information, name, address, phone number, date of birth, whatever is wrong. I'm going to dispute all of that. Then I'm also going to go ahead and start looking at the accounts, because for those who already have some form of established credit, you're going to I remember opening a car automobile loan back in 2020, and I remember borrowing $20,000. But let's say that your bank was Bank of America, and Bank of America said you missed a payment in the month of March of 2020. And you know without a shadow of doubt that you didn't miss a payment at all. and you actually have verifiable proof that shows you did not miss a payment and that your payment was made on time. You can then dispute that with the credit bureaus, and you can dispute it with your lender. Who is your lender? Bank of America. When you are establishing credit, this is your life. Just like your social security number is tracking you, your credit is tracking you. So when you see items on that credit report that does not make any sense to you, or you're noticing that there's some inaccuracy in that, you want to dispute that information right away. And the first thing you want to do when you are disputing is you want to ask those individual lenders or account holders, whomever they may be. So you went to Bank of America, you got the $20,000 loan for your car payment last year. Then you went ahead and you opened up a secure credit card with Capital One, and you had a balance of $300, and they're pretty much saying that you had some late payments on that too. You're like, oh no, I haven't been late. I've been managing my money correctly. I've been staying on task and following the guidelines at this time. So what should I do? You're going to contact them and you're going to dispute it. You're going to dispute it with a verification letter. That verification letter doesn't have to be like a college essay. It doesn't at all have to be like a college essay. But you want to put in the valuable information. You want, of course, to put in who you are. You want to have your current address listed on there. And you also want to make sure that you have the accounts and the account number that you're disputing as inaccurate. And you want to have them to verify the information that they have on their end, and you want to be able to verify the information that you have on your end. 9 times out of 10 with all of my clients, typically the lenders, sometimes they do have it wrong. And what happens is that they, by law, through the Fair Credit Reporting Act, they have to remove that information. If it's incorrect, if you have the proof that information is indeed wrong, that they have in their system, by law, they have to remove it off the credit report. And when they remove it, guess what? Boop, 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 boop. Your credit score is going to jink up. I'm actually going to start taking some questions. I know that my time is very limited, but I want to address some of the questions that I have. So someone says, I have no student loan debt, but I do have 3 credit cards, 1 from my bank and 2 from Capital One. That is awesome. So what that means is that you have 3 trade lines already. That is amazing. Lenders really, so when you actually get out of college, the great thing about when you want to go into home ownership, like let's say you're saying, oh, I want to buy me a nice condo, me and my girlfriend, we, lovey-dovey, or me and my boyfriend, we want to buy us a condo together. We want to have trade lines. They want to see 3. And you definitely are in the right place. You already have your 3 trade lines that you have available and open. Now, my question to you, though, is how are you using them? Because you want to make sure that you're using them responsibly. And again, you want to make sure that you're staying under 30%. Under 30%. So if you have, let's say, for an example, my first credit card, I'm not going to talk about my first one because that was just janky. After I had learned better, I got a credit card through Discover, and it was a student credit card, and they gave me $1,000 on it. And of course, I was so excited about my $1,000. It's like, woo, something really big to brag about. But with that $1,000, of course, I had to use it responsibly. I could not use more than 30%. I actually had to stay under 30% of credit usage every month. Every month. That is the key. Every month. And you want to make sure that you're paying it off in full. So what I would do is with my $1,000, I would only actually use And believe it or not, I was only using 10% of it because I wanted to make sure that I was staying under my credit utilization, under that 30%. So I would take $100, and let's say for the month of the beginning of April, I'm just using April as an example, I would go ahead and I would use that $100, and I would give that $100 like for gas or for food, just, for the month. And then when my statement was due, when I got that letter in the mail, my statement had that date on it, and I paid it off in full, because it's easy for me to pay $100 versus in full every month versus me paying $1,000 in full every month. I just couldn't afford it. So that's awesome. Um, um, Someone is saying the speaker keeps freezing on my end. I'm really not quite sure. Maybe Miss Crispin can assist with that. How is the self-lender website? Oh, what is the self-lender? So the website of that for self-lender, the website is actually called Self, S as in Sam, E-L as in library, F as in Frank. So that is the name of the website. You are definitely more than welcome to jump on that right away and get the information that you need. I know for a fact, I love Self-Lender. My husband and I, when we were on our journey to building credit, when we first got married, and we got married pretty young, we got us some self accounts. The moment we found out that information, that was the first easy, it was just easy for us to do. I have no credit. Where to begin building credit? So again, if you don't have any credit, self-lender is the first step that I would take. I will go onto that website, self.com. It only costs about $9 to open up the account. The account is an actual savings account, but what it does is it allows you to save or to put money into that account every month, and it reports to the credit bureaus each month, to all three credit bureaus. And it's a great method of building credit. Another way to also to jumpstart is not only just get you a self account, but you want to get your credit card. That is also going to be a great dynamic of showing that you can use credit responsibly. I would honestly, because you guys are college students, I would go through Discover and get a secured secured credit card, or get you a secured student credit card. And it has more benefits. You get cash back. So when you make a purchase on something, you get a little money back at the end of the month for the purchase that you make. So that's a great way to start. What credit company would you advise a student like me to start with? What credit company? So I definitely want you to elaborate a little bit on what credit company. If you're asking about what credit card company, I would definitely say start with Discover, because they have the student credit card. It was awesome. What happens when, let me kind of trying to get everyone's questions right on here. Can paying your car note early really reduce your overall interest due and allow you to pay off your loan faster? If so, how early should it be paid? That is an awesome question. So yes, so let me tell you something. Paying your credit card or paying your car payment off early is amazing. Now let me tell you something. The earliest that you should do, so most lenders and the credit bureaus, they want to make sure that in order for them to track your credit history, they want to see that you have at least have a solid 1 year of credit history payments. So let's say you got your car last year in December. I wouldn't pay my car off right now. Why? Because again, the credit bureaus, they want to track at least 12 months. 12 months is a year of you maintaining a car payment, and you've been able to pay it for the last year, for the last 12 months. So if you go ahead and you decide, well, since I bought my car in December of last year, I want want to pay it off this year, 2021 in December, and I want to pay it off in full. That is amazing. Not only will it cut down on the interest, but boop, 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 it's going to also increase that credit score. But here's the thing. When you had when you had the car payment or the car loan, it counted as an open trade line. So once you pay it off, you need to have another trade line, something else that's reporting to the credit bureaus every month too, so that it continues to show that you know how to make and so that it can track again your on-time payments every month. Do I need to have more than one credit card to have a good credit score? That is no, you don't. But you do need to have what they call a credit mix. A credit mix actually accounts to about 10%, 10 to 15% of your credit score. Are looking to see on your credit profile. They want to see that you have that you can manage a different variety of accounts. So credit cards account for revolving debt. And the reason we call it revolving debt is because, or revolving accounts, not to say debt, but revolving accounts. They call it revolving accounts because you have a credit limit, and that credit limit, you will always have access to that same credit limit, of course, unless they give you an increase, but it's revolving, which means that you can continuously keep using your same credit card. You continue to use it. It's constantly revolving. You can go use your credit card today. You can go next month and use your credit card tomorrow. Next month, you can continue to use it. That counts as revolving credit. It's like you want to buy furniture for your new apartment. You get something called an installment loan. Now, an installment loan is also a part of that credit mix. So you now have a credit card, that one credit card, but now you have an installment loan. The difference between your revolving credit, which is your credit card, and your installment loan is that your installment loan has a term. And the term is typically a very short term. And they're usually more higher in interest too, but it's soon to close out. And so, which means that you are paying an installment each month on that loan. So when you're making your payments to that particular lender, they are allowing you to get access to the credit, or you were able to take home the item today and they gave you a credit, or they lent you whatever, the $5,000, and then they say, okay, you have to pay on this $5,000 within 30 months. Making your installment loan is perfect. So no, you don't need multiple credit cards. One is just fine. Yes, self.inc. That's exactly the website. That is exactly the website. And it like I said, it's an amazing site to start really jumping into getting your credit repaired. I could take a few more. What happens when you don't have a minimum to pay? Can you still pay some money and not the total? So if we're talking about credit cards, your credit card, you're always going to, now, I guess let me ask you this question. Are you talking about a credit card or a charge card? Because they are different, but they both do show you credit limits. And when you have that credit limit, when you get your credit card statement every month, it's going to show you a minimum balance on it for you to pay, which means that you are expected to at least pay the minimum. So if your minimum balance is $25 but the total balance is $100, you are required to at least pay the $25 just so that it will account for you making on-time payments. Your charge card, if you're doing a charge card, now I don't know if you guys are at that level yet, but if you ever find yourself where you have American Express, a lot of those charge cards, they don't actually have a credit limit. It's pretty much it's limitless pretty much. And you can charge merchandise onto that card. But of course, you are still responsible for making the payment on that card. I have student loans which are in forbearance due to me being in school, and because of the CARES Act, I am trying to get a home loan. And one lender is telling me that I need to go ahead and start paying on the student loan, so I need to complete an income-driven request. And one lender is saying that they will calculate 1% into what I qualify for. Do you have any suggestions of what I should do? Yes, I was actually in this same boat. So I was actually in forbearance too. But difference though, and I was in school at the time when we purchased our first home. And I wasn't making, much money either. And so they were a company, but they needed me to show what a letter of what I would have been paying them had I been making more money. I don't know if that makes sense to you. So you can actually go to your lender and ask them and say to them, hey, I'm on an income driven with you guys, and my income driven right now is at $0. And the lender wants to know though, if I wasn't on this income driven payment plan, what would I potentially be paying guys? And then that's what your home the mortgage company or the lender who's looking to lend you money for your home, that's what they would factor in. Do they pay you interest for putting your money in there? Absolutely not. Absolutely not. So if you are looking to open up a self account, they are not at all counting on any additional interest, nothing like that. And the great thing about it too, like I said, is because they understand that it's the starting point for people who are looking to start building credit, and for those that are in college, freshmen and sophomores, who pretty much are just like oblivious to this. This is my first time really getting into this, and even some of those that may have an idea of what it is, but just never took it in. Self is definitely going to be a great starting point. So open trade lines, again, are those accounts that report to the credit bureaus every month. And that's what starts and jumpstarts your credit building process. Those open accounts can range anywhere from credit cards, from car loans, mortgage loan, rental payments. Again, I said that you can go to creditmyrent.com and you can sign up for that, and they would be more than happy to go ahead and get in contact with your landlord. And then from there, they will start reporting your rental payments every month to the credit bureaus. And I'm kind of, right now just kind of talking, generalizing, but if you have any additional questions that you have for me, because I know that I am running out of time, you are more than welcome to send them over to Ms. Crispin, and she can send me an email. And I'd be more than happy to go ahead and get the information over to her so that she can then forward it over to you. But I hope you guys enjoyed every bit of this informational session. I am the CEO and owner of Credit Fit Restoration, and I have so much experience with working with credit, from people that are in the beginning stages of building their credit to those who already have been in the credit process, and they may have made some poor decisions with their credit and now they need to rebuild their credit. I'd be more than happy to talk with any one of you on a one-on-one basis. But my time is cut short. Maybe I can grab one more. Let me see. Trying to go down just a little bit. Already, so I already owe $11,000 in student loans. So if you already owe $11,000 in student loans, you definitely want to see. I don't know if you're a college student or if you're currently in school, you're in forbearance, but when you come out of that forbearance period, you definitely want to get into what they call an income driven repayment plan. That income driven repayment plan is going to allow them to factor in how much money you make monthly, and it's going to give you a breakdown as to if you qualify for paying a $0 balance every month, meaning that you're not making enough money to currently at this moment pay back that $11,000, or they may say, well, you have to pay us $25 a month. Again, it all goes according to your income. So I would contact my lender. Um, and you can, even while you're in school, you can actually right now start making monthly payments on your student loans. You can do that. You have access to that. You can go right into your portal and you can start doing $25 a month. And not because you are obligated to at this time. You're not obligated, but you definitely have that as an option. But anyway, I hope I was able to answer as many questions as you know, and as quickly as it could. And I hope this information, webinar was just impactful. I hope you can utilize a lot of the tools and resources that I provided you with. Thank you.
We would like to thank Mrs. Hines for her presentation today. This event will be available for playback via our Student Life YouTube channel. All attendees today who stayed for the entire event will be placed in a raffle, and three $25 gift cards will be awarded to the winners. Please be on the lookout for an email for the winners via your student email. Also, if you are attending for Eagle Points, they will be rewarded within 2 business days. Thanks everyone for coming out.